When you're a real estate investor, you're generally pretty comfortable with the idea of risk. It's inherent to the investing game. There's a lot of things that you can do in partnership with a good risk manager and insurance broker to minimize and transfer as much risk as possible. We're going to take a look at some of those strategies right after this. Hi there folks, I am James Jenkins, Chief Risk Officer of RiskWell, and this video is part of our Real Estate Investor Insurance Academy brought to you by RiskWell. There's about 17 videos available on the series, both on our website, REIRisk.com, as well as our YouTube channel, which is probably where you're watching this video right now. So we're going to jump right into the screen share. You're going to have plenty of opportunity to talk with me further about this. Each one of these items we're going to discuss is a very specific strategy that needs some more conversation. This is a high-level overview. So let's go ahead and get the screen share up, and we will jump right in. All right, so risk transfer strategies for real estate investors. First thing I need to say very clearly, I am not your attorney. I'm not qualified to give legal advice, but I'm very qualified to give risk management advice. That is the place I am coming from with the stuff we're talking about here. The first risk transfer vehicle is what's called an indemnification agreement. To indemnify someone is to make them whole, make them as they were before a loss. An indemnification agreement is simply a part of a contract where a party agrees to make another party whole. And for your purposes, you want to make sure you're including indemnification agreements with any third-party agreements that you are signing for subcontractors in particular, but you want to make sure that any agreement has an indemnification clause in your favor. The next is what's called a hold harmless agreement. There are three types of them. We're not going to get too far into the details there. Suffice it to say, the difference between a limited, an intermediate, and a broad hold harmless agreement is really coming down to which party is at fault. Whether it's the other party, both you and the other party, or just you and only you are at fault. That's really the three differences between those types of hold harmless agreements. A lot of state legislatures have found broad hold harmless agreements to be against the law because a lot of times it's the really big company or the really big part of the contract forcing a broad hold harmless agreement on a really small other party on the contract that kind of doesn't have any way around accepting a lot more risk than might be fair in the situation. So keep a lookout if you're on the receiving end of a hold harmless agreement. You want to make sure that it is written in a fair and equitable way that balances the actual needs of the situation. Basically what a hold harmless agreement is the party that is giving the hold harmless agreement to the receiving party is saying that they will defend the receiving party from any legal liability stemming from the results or the terms of a contract. So make sure you understand exactly how that applies to your unique situation. Next is a waiver of subrogation. We've talked about this a little bit elsewhere in the REI Insurance Academy, so sorry for double dipping those of you that are watching these videos on a marathon. Waiver of subrogation is simply an agreement that waives an insurance company's right to collect damages from the party that is in receipt of the waiver of subrogation. If you don't have a waiver of subrogation, you could be in a situation where your insurance company goes after one of your subcontractors, or even worse, one of your clients or customers to collect damages that were paid out by that insurance company. It can be a really sticky, nasty, awkward situation if you don't have a waiver of subrogation as a part of the agreement. You can have your insurance company or be, one of your contractual relationships have their insurance company coming after you, trying to sue you and get damages from a situation. So just make sure that whatever you have has a waiver of subrogation included. And also you want to make sure you have additional insured status coming in your favor from any insurance policies that are affecting you, from a subcontractor, from someone that you're doing business with, for both ongoing things that are happening right now and completed operations, those things that happened in the past. You want to make sure that you have a blanket additional insured endorsement, it may be a lot more cost effective if you are going to be issuing anything more than 2 or 3 of those endorsements throughout the year. You can issue them one at a time, or you can issue them on a blanket. The blanket typically is more cost effective for when you're buying insurance. And lastly, always have a written contract with a written scope of work and written expectations and agreements. If you don't have a contract in writing, it is very difficult to resolve disputes and to make things happen in a fair and equitable way. So, there you go, folks. Your risk transfer strategies from the good folks here at RiskWell, myself mostly. So, you have any questions? I'd love to talk with you more about this. Schedule a no-cost consultation with me. You can call our office at 469-678-8001 or email us at info@riskwell.com. That's all for this video. If you see some value in what we're doing here, please consider subscribing to our channel, like the video, and give it a ring on the bell so you get notified when we drop new content. Check out our other videos in this playlist. And that's all for now, boys and girls. Please remember, life is risky. Risk well.